Well, good morning. Yes, it's me, Kenny Polcari, your host of the party, and today is Thursday, August 8th, 2024. And here are the things you need to know to get your day started. So stocks remain confused, right? 10-year Treasury auction was weak yesterday. Markets need to repair a lot of the damage from Monday's action, so expect more of this, right? Bond yields are up. Oil and gold are really flat, right? Nothing really causing them to go up or down in any real direction. And what do we have for dinner tonight? We're gonna have the mussels from Trieste, right? Which is a part of Italy, and we'll talk about that in a moment. So again, it was a dead cat bounce, right? Recall what I said yesterday, right? The rally back up on Tuesday was just that, a dead cat bounce, right? And it's defined as a short-term increase in the price of maybe a declining asset during a regular economic cycle or during kind of market turmoil, right? Now, they rallied them hard on Tuesday morning after the debacle from Monday, remember, only to sell them off into the bell. Leaving them in positive territory, but still off the day's highs with a little bit of angst kind of churning around. And then again yesterday, they tried to rally them right out of the opening gate, right? And they took them to the day's highs by 10 a.m. and then the rally started to fade once again. And then we get the much weaker $42 billion 10-year Treasury auction, and that drove the yield, the 10-year yield, up to 3.954%. The bid to cover ratio, which measures demand, fell to 2.32 times, well below the average of 2.53 times, right? And demand was weak from both direct and indirect bidders. Now, direct bidders submit bids directly to the Treasury without using a broker, right? These bidders include small banks, large investment funds, and other funds that have a direct Treasury account. And this was below average, while indirect bidders are bidders that use a broker to submit their bids, right? And these includes global central banks, hedge funds, mutual funds, foreign sovereign funds, and other institutional investors, and that was lower as well. And this weakness speaks to the volume of treasuries that Janet is going to have to bring to the markets to support the massive deficit, right? And we talked about this before. The more she brings, then the lower the prices go and the higher the yields go, right? Lower yields in treasury markets doesn't mean anything other than investors are demanding more yield for their money. That's all it means. It doesn't mean it's a disaster. It just means that they want more yield, right? And they're going to get it. All of this coupled with the technical damage done on Monday, and then the JP Morgan revision to the chances of a recession by year end. They now think we have a 35% chance of a year-end recession, and this is up from a 25% chance just a month ago. And all of this data left the markets trending lower. The Dow fell 235 points, the S&P lost 40 points, the NASDAQ gave up 171 points, the Russell gave up 30 points, the transports gave up 152 points, and the equal-weighted S&P fell by 21 points. The events this week have shaken investors and the markets and shows how technology and emotions can dominate the action, right? And stocks remain vulnerable, right? And some investors feel like they remain vulnerable. We need to see more evidence that a bottom is building, that stocks have found a floor, and I'm not sure that we found it yet. I don't want to sound like a broken record, but there are a lot of things that are going on right now that investors need to really consider before they make any decisions. We're in the seasonally weak time of year, August through October. We have a Mideast that's about to explode. We have a very divisive presidential election with Cami now defining her campaign as joyful warriors versus the Trump campaign that she defines as full of anger and grievances. Well, I'm not sure about you, but I wonder how Gigi and Vlad and Chubby, right, Kim Jong-un and the Ayatollah think about joyful warriors. But that's a whole nother conversation. We have a building recession. We have some that think that the Fed has lost its way. We have Janet that needs to bring a massive amounts of debt to the Treasury market. And we have blue chip companies that are also trying to fighting to bring debt to the markets as well. $31 billion at corporate fixed income yesterday. And that debt carries a higher yield than Treasuries, which presents an issue for Janet, right? And for investors and for future Treasury yields. We have countries around the world that are also struggling to find their way with interest rates. Many also now in a cutting mode, right? Leaving investors to ask why. Is it because of a weakening economy that they're cutting, or is it really because of a strong economy that allows them to cut? Because that is also the question here in the United States. And after Monday's retreat and all the calls for an emergency rate cut, right? The very word emergency creating even more angst by some well-known names, we are left wondering whether or not our economy is going down the drain or not. And cutting rates for that reason, once again, is very different than cutting rates because our economy remains strong and inflation is under control. And all of this leaves the markets in a state of confusion. And when that happens, the path of least resistance is always lower, right? Because the market remains erratic when the future plan is unclear. But when there's more clarity, good or bad, the market seems to function better because it understands, right? It's clear. Either the news is good or the news is bad. When it remains confusing, the market's kind of erratic. Okay. So far, none of the indexes have breached their oversold line on the relative strength scale. They're all just sitting a hair above it, which leaves us vulnerable to more downside pressure. Pressure for what many analysts think will be the S&P testing the long-term trend line, which right now is at 5,020. Others think Monday's low of 5,119 could be the level. Whatever it is, it is. So prepare yourself for more volatility in the days and weeks ahead. Eco data today includes initial jobless claims expected to be 249,000, up from 240. Continuing claims of 1.87 million, down from 1.877 million. Next week brings us to July CPI and PPI along with retail sales. Oil's trading at $75.10. Gold is trading at $2,442. Nothing major for either commodity. They're kind of staying right in that range. European markets are weaker this morning. All indexes down about 1% across the board. It's the same story in Europe as it is here. Lack of clarity and broken technicals that leave investors searching for more. U.S. futures this morning are mixed. Dow futures are down 90, the S&P's down 3, the Nasdaq's up 15, and the Russell's down 9. Lilly came out and they just reported numbers that blew past the estimates and hikes their guidance as Zepbound and Mounjaro sales soar. Remember, those are the GLP weight loss drugs. The S&P closed at 5,199, down 40 points. Now stay tuned. The chaos is not over, as I said. The recent moves are a stark reminder of how quickly it can all change. In the end, be confident in your portfolio. I keep telling you this, become a bit more defensive, and that includes sectors like consumer staples and utilities that are not sexy at all. Make sure you know what you're owning. In times like this, talk to your advisor if you're concerned. And if you don't have one, feel free to call me. You can get me at 212-381-6194. Okay, so what are we having for dinner tonight? We're having mussels Trieste style. Now, Trieste is a seaport in the northeastern part of Italy on the Gulf of Trieste. Way at the top, right? It borders the Adriatic Sea on one side, the country of Slovenia to the north. Its history and culture have been impacted by Austrian, Hungary, German, and Latin influences. Right, so it makes it a very interesting area. It's the capital of one of the 20 regions in Italy, the Friuli Venezia Giulia region. At one point, this was the fourth largest city in the Austro-Hungarian Empire, and was known for its contribution to literature and music. Right after World War I and after the collapse of the Austro-Hungarian Empire, Trieste partnered up with Italy, and today is the capital to one of the richest regions in the country. Now, mussels prepared Trieste style are easy to make and they're easier to eat. You're going to need mussels, 2 dozen or so, thoroughly washed of any sand. Make sure you scrub them, right? You need white wine, clam juice, garlic, sliced onion, olive oil, salt and pepper, fresh bay leaves, and toasted Italian seasoned breadcrumbs, right? Because that tops it all off. Now, in a pot, you're going to heat the olive oil. You're going to saute the garlic, add the onion, and continue to saute it, right? Be careful not to burn it. You don't ever want to burn it. Add 1.5 cups of dry white wine, nothing fruity. You know me, I go with the Pinot Grigio Santa Margherita. You want to stir it, let it come to a boil. Add that small bottle that you can buy of clam juice at the store, and some fresh bay leaves, 2 or 3 or so. Season with salt and pepper, turn the heat down to simmer. Now add the mussels to the pot and cover it tightly, right? Cook it until the mussels all open. Should be maybe 5 to 8 minutes, not much longer than that. Discard any mussel that refuses to open. Now, add a couple of handfuls of seasoned breadcrumbs and toss well so that the breadcrumbs mix with the wine and the juice to create this nice thickened sauce, right? right? You don't want too many breadcrumbs, so just add a handful and then decide as you mix it. Depends on the quality or the quantity of mussels that you're making. Kabish, so you're making a big pot of mussels and you're gonna need more breadcrumbs. Again, set the outdoor table with placemats, linen napkins, and wine glasses. Hopefully there's a full moon to help set the mood when you do this. Present this dish in a large bowl with the mussels bathing in the sauce. The dish demands toasted garlic bread so you can dip it in and soak up the sauce while you're feasting on the mussels. Serve this with a chilled white wine, maybe the one that you used, and while you can use a bunch of them, I always like the Pinot Grigio Santa Margherita, but you might find that a nice Falanghina works for you as well. In any event, it continues to be kind of a cloudy day, right? Suggesting that the temperature, the environment doesn't really know what it wants to be today. And will we see that again in the markets? Not really sure what it wants to be. Does it want to be a bull? Does it want to be a bear? Does it want to be something in between as we vie for building a base? In any event, until tomorrow, take good care.